Wow, who would have thought interest rates for loans at 2.5% or around the 2.5% mark? It's all-time low. So for a lot of people that have got mortgages, and most people who have a mortgage have fixed terms, they're asking, should I be rolling my mortgage down to a lower interest rate? This is what we call breaking a fixed term and refixing at a lower interest rate. When you do that, there's a few things we need to speak about. First is, what is breaking a loan before we get to should you be doing it or not. Breaking a loan, as I said, is a fixed contract that you have with the bank. They're relying on that interest that you're going to pay, that you've agreed to pay for that period of time. It's really important for how they run their term deposits and their loans because they balance off against each other. So if you break that contract, there's an expectation there that the bank had, and that's where the break fee comes. So that's the next part of breaking. The consideration around, is there a break fee and what's the implication of that? That's why it exists. And then, so you go to break your loan, there's potentially a fee there, but the reason why you're breaking is because there's going to be an interest savings. I just want to explain that because it leads into, should I break or not? Well, you need to go through what we call a break cost analysis. And one of our specialists can run you through that if you're either an existing client or someone that wants to get some advice in this area. And they'll balance off whether or not the break fee is bigger or smaller than the savings. Obviously, if the break fee is bigger than the savings, you're most probably not going to break your loan and refix. But certainly if it's smaller, so therefore the savings is bigger, from moving to a lower interest rate, well, then you're most probably going to be looking at breaking your existing contract and moving to a new one, because it's about how much we're saving when it comes to growing your financial wealth and reducing your debt. That's the high level what we're looking at, but there are some intricacies about the break cost analysis and identifying whether or not you should be doing it. And the other key point to notice is that not all loans are equal, and most people have a number of fixed loans in place. It may mean that some loans it doesn't work to break them and refix them, and other loans in their portfolio it does. So you can actually break one loan and refix that, keep your other ones, and still get some saving and take advantage of rolling down to the lower interest rates. So really, really important things to understand. So it makes common sense to try and understand if you can break, and from that, those cost savings, especially in this time, there's a number of things you could use those for. The first thing that we're generally looking at people using them for is to meet their adjusted budgetary requirements in the environment that we're in. Some people's, obviously, incomes and whatnot have tightened up. So it's just meeting, managing their expenses and their budget. The second one is if that hasn't been affected, is actually potentially using some of those savings and pouring that into reducing the loan and de-risking yourself financially. Obviously, having a loan is a risk, so minimising that. Great time to be reducing debt. The other thing they're looking at is potentially investments, and a big one is to look at is your KiwiSaver, especially if you're self-employed and you haven't been contributing, or if you're earning under $35,000 or someone in your family is earning under $35,000, you may be able to contribute a little bit more money to KiwiSaver and take advantage of the government contributions. So it's free money through KiwiSaver. So again, it's about making every dollar that you earn or have at your disposal working as hard as possible for you. So some key elements there about what is breaking, what we're looking at when we're advising clients about whether to break or not, and then how are you going to use some of those savings from breaking, if it does work out for you, and refixing to maximise your financial position. So if you've got some questions around that or it's sparked your interest or you're motivated to act on that, look, give us a call. One of our mortgage specialists is more than happy to help you with the process and step you through some of the intricacies of that and what you should be doing in the future. So that's about it for today on breaking. A very topical subject at the moment. So feel free to give us a call. We'd love to hear from you. Thank you.